Hello friends, I'm back with another video and this time again on Straddles. Why I'm saying again is there is a video which I had done almost more than 2 years back in October 2022, and that was well received and a lot of people have been trading based on that video. And then what happens is we also keep looking at some new ideas and we also keep improvising. And there are a couple of things which have come to my mind, and then again based on some questions which people have asked, some queries, you should plot the triple moving average of the ATM straddle, and whenever you get a double bottom sell below the triple moving average of the ATM straddle, that is the right time to short, as long as the stop loss is within affordable reach. That is extremely important. The stop loss, initial stop loss, can be a swing high or a double top buy above the triple moving average, and swing high on point and figure chart. You can also add mini tops and mini bottoms, so that is the initial stop loss. So as long as the initial stop loss is affordable, you can take the trade and then trail it as per the chart. And for the exit, I had mentioned three types of exit. One is if the straddle no longer remains ATM. For example, let's say you have shorted a 24,000 straddle because that time Nifty was 24,000, and then let's say Nifty goes to 23,800 or even lower. So that is no longer an ATM straddle. Maybe the straddle is still weak, it is still going down, it has not got stopped out yet. That is possible, especially in the first 10-15 days of an expiry, first half. So if that has happened, but it is no longer at the money, so that time it is better to exit that. Book profit in that, and then look at the fresh ATM straddle, which in this case will be 23,800 as per the example I gave. Look at a fresh entry in the 23,800 straddle. So one trade is out of the way, and look at the next trade. There is no need to keep trailing the earlier one, because who knows, next day if there is a gap down all the way to 23,600, then you are exposed. So to control that, always better to shift to a fresh ATM as long as the initial straddle is more than 200 points away from the current price. That was one way of exit. Another way of exit was if the straddle is coming down and there is a big anchor column, though it is still below the triple moving average, let's say, but there is an anchor column. Now, what is an anchor column? Anchor column is nothing but any column which has 15 boxes. So this bullish anchor column will have 15 X's in that column, and this will be a 0.5% box size, the same as I had explained earlier. So if there are more than 15 boxes, which means that straddle has moved by 7.5%, 15 into 0.5, and then the double top buy on that anchor column, follow through. So the double top buy to the anchor column is the follow through. So that is an exit, even if it is still below the triple moving average, or sometimes it overlaps the triple moving average. So that is an indication that market is likely to be trending now, and it is no longer sideways, because straddle is basically what you are shorting a straddle expecting a range bound market. So if the market starts trending suddenly after maybe 2 or 3 days, that helps in giving an exit, and that was another exit. Another form of exit was just using a double top buy above the triple moving average. The triple moving average will come down along with the straddle, and when that turns, and if there is a double top buy or a triple top buy above the triple moving average, that is another way of exit. So these three were the ways of exit which I had mentioned. And of course, I had not talked about adjustments at all, because I believe that you should always be short in a straddle which is at the money. And if you get an exit in one of the straddles, you switch to the fresh at the money. As simple as that. So this was in a nutshell what I had explained 2 years back. Now coming to the current scenario, I am shooting this on 28th November, which is the expiry of November 2024, where area marked in the red rectangle is the range on which in which Nifty has moved this month, this expiry. So on the left is about 29th of October when this expiry started, and this is the last day today, 28th November. So you can see here that Nifty moved all the way from 24,500, again went down to 23,900, 23,800, went up back to 24,400, 537, and then made a new low near 23,263. Again went up to 24,300 or so, and today it has gone down quite sharply and has closed at 23,914. So how could one have traded straddles in this month, which was, in a way, if you look at the 28th October closing, it was 24,339. So from expiry to expiry, we have closed about 400 points lower. But does that mean you can just short the at the money straddle on that day and just forget it and cover it today? No, there are ways where you can look at the ATM straddle and look at exit and a fresh entry in a different straddle. So one of the major things which I had briefly mentioned earlier, which is the tweak I was talking about, always look at the chart of India VIX. Now, everyone knows that India VIX is nothing but it is derived. I mean, if you look at the formula of India VIX, it is derived from the Nifty monthly options premium. So if VIX is rising, that means the premium is rising, which can go against you if you are shorting a straddle, because the call and put both rise. And on the left is around 28th of October, 29th of October, which was the starting of the November expiry. So here I have plotted India VIX on a 1 minute chart, point and figure chart, with a 0.25% box size, and added the indicator must, which is the indicator in trade point as well as zone. This is nothing but a trend filter. So whenever India VIX is rising above must, that time, that is the indication that VIX is, market is more volatile. And that also means that you should be careful with shorting straddles. Most of the time, maybe more than half of the time, 70-80% of the time, when VIX is rising, that means market is weak. VIX is also called as the fear index. So that is one reason why VIX rises. And then if you see on 28th and 29th of October and go back to the Nifty chart. So this is 29th October. So that time market was sideways and then it went down till about 4th of November. So what happened to VIX that time? So this was 29th October. VIX went up all the way till 4th November and then started coming down on 5th November. So once it starts coming down either in the Musk cloud or below the Musk cloud, that is the time you can start, because here you're not. One thing is very clear: if VIX is rising sharply, straddle will not give a good sell. Even if you enter straddle, it will get stopped out, and then problem is a lot of people have a problem with exit and they try to adjust. So that is something which, especially for beginners, there is no need of doing that. Just exit the straddle. In this case, right from day one, the VIX was rising. So don't even look at shorting straddles. Wait till the VIX starts falling. So this was 5th November. So let us see on 5th November what was Nifty. So here on 31st October, 4th November, Nifty made a low near 23,816. And then on 5th November, the low was 23,842 and Nifty started rising. Before that, if you had shorted the 24,300 straddle around 29th of October, this was the place where it would have definitely got stopped out. That is what I meant when I said that straddle does not drift down when the VIX is rising. This was the place where this was 28th October, 29th October when VIX started rising sharply and it started going up. So when the straddle goes up, that instills a fear in the trader's mind of what to do, and then unnecessary adjustments thought of. There is no harm in adjusting, but my point is you should be very much well aware and extremely knowledgeable about what adjustments are required and when to adjust, what to adjust, when to come out of it. That is something which you need to learn a lot about. If that is not the case, then it is better to follow the charts objectively. So that was the case where the 24,300 straddle gave an exit, as simple as that. So now if you go to the low again on 4th of November, which is 23,900. So let us go to the 23,900 straddle chart. So the point was from 29th October till 5th November, don't even think of shorting any straddle. So on 5th November, what happened was Nifty made a low near 23,842 and started rising and went to 24,200 and 24,300. So let us plot the 24,300 chart again and look what happened on 5th November. So this is the 5th November time frame over here. Again, this is the same chart, 0.5% into 1 minute and 24,300 straddle. So that time, this 24,300 straddle gave a sell over here on 5th November. This is 5th November. So any double bottom sell, or this was a triple bottom sell, in fact, below the triple moving average. So this sell came at 767 over here. From 767, the stop loss could have been the previous day's high, or something like that, a swing high or that kind of thing. And then it went all the way down to about 650 or so, 670 on 6th November. Let us see what happened to the market on 6th November. 6th November, market gapped up and went up all the way to 24,500. That was 6th November. So here, that is what I said. Since the market has gone up and it is more than 200 points away from the shorted straddle, this was anyway exit on the low here on 6th November here. So this straddle gave an exit immediately within, if one had shorted near 770, 780, it gave an exit within 30-40 points, and that was because Nifty had started rising and this no longer remained at the money. So that was one indication that the straddle might give an exit. Next day, what happened was Nifty gapped up over here and went to 24,500. So once you have got an exit from the 23,900 straddle, you need to plot the 23,500 straddle. or 23,400 straddle, 24,400 straddle, and then go to 7th November. So this is 7th November where it gave a sell near about 610 or so, and went down all the way till about less than 500. In fact, the low was 490 or so. And then on 12th November, it gave an exit. First of all, on 12th November, what was Nifty? Nifty had started coming down again. And on 12th November, in fact, you will see that from 24,200, Nifty had gone all the way down to 23,800. So it was again a case of more than 200 points away. So it was signaling that you might get an need to exit, even when this was still falling. So this was an exit over here. Of course, it gave a exit on the moving average as well. So here, once you started here, you got an exit more than 100 points lower. So now what happened on 12th November? Let us look at VIX also. On 12th November, VIX started rising again. So from 12th to 13th, and again, if you look at 14th November, let us see what was Nifty over here. So 14th November, Nifty was near 23,500, 23,400. So if you plot 23,600 chart, so we have to see the 23,600 chart on 14th November. So this is 14th November over here. Here you get an entry below 510 or so over here. And it goes down. Here the triple moving average is sharply going down. Whenever the average goes down sharply, that means it is a strong trend. And in this case, the trend is bearish because you want the straddle to go down. So till about 19th November, it was going down. On 19th November, let us see what was Nifty. 19th November, Nifty went to 23,500 or so. And then 21st November, Nifty made a bottom near 23,400, 23,349. So again, it was a case of more than 200 points away. So this was a place where you got an exit. Then what? Let us see again what happens to VIX. Again, VIX started rising from 19th November till 21st, 22nd. So for 19th till 22nd, don't look for a fresh trade. On 22nd, what happened? Let's see where Nifty was on 22nd of November. Again, 22nd November, Nifty was sharply up. It went up all the way to 23,359. So there was no way any straddle would have given a sell. And then on 25th November, when Nifty gapped up and it was near 24,300 or so on 25th November. So let us go to the 24,300 straddle on 25th November. So this is 25th November where Nifty was near 24,300, 24,350 or so. And the straddle gave a sell near, in fact, you can see this was a sell at around 305 or so. The triple moving average was sharply going down. And maybe this was an exit. But another point which I always say, here it gave a turtle breakout above the moving average, but then again came back down. So that was something which I often say, re-entry is just a brokerage away. Because if it gives an exit, you must exit. If it is still going down after that, there is no harm in re-entering. So maybe you lose 20-30 points, but who knows, it would have gone up much higher. So it's better to exit rather than take a chance. And then short again at 250 here. And from there, from 25th, 26th, 27th until today morning, it went down all the way to 110 from 300. So you can see how much, of course, there was a whipsaw of about 20-30 points. But still, you could have made about 150 points in just 3 days in the 24,300 straddle. And then what happened today? There was a sharp fall in Nifty from 24,350 or so in the morning. And this is the place where it gave a turtle breakout above 147 or so. And that was an exit. So this is the way you could have traded this also. After that, Nifty was falling very, very sharply. Everyone knows that it crashed, I think, almost 300 points or in fact, more than 300 points from the high. And so there was no looking at a straddle, because another thing was, look at the VIX. VIX has also gone up sharply, and right now VIX is higher, above the must. So even if I were to look at, let's say, I'll plot a fresh straddle for December for at the money. So Nifty 26 December 23,900, 0.5% box size, 1 minute chart, add a triple moving average. So one can say this was a double bottom sell at about 790 or so. So this was a sell, but is the stop loss affordable? Because the stop loss was 890, which is almost 100 points. So right now it is not a good stop loss to have. So better to wait. And this is a new expiry which is starting tomorrow. So one can take a fresh view tomorrow. Maybe it opens gap up slightly and then gives a double bottom sell. That is the time. Because another thing which is very important in point and figure charts, we call it a pattern retest. If you look at the lows, so this line near 730, 750 or so, this straddle is taking support near that level. So who knows, Nifty might be taking a trend from tomorrow. So better to wait. There is no harm. No one is pointing a gun at you and saying that you must be short in a straddle at any given point of time. There is always a time, there is always a phase in between, sometimes 1 day, sometimes 3-4 days, when Nifty is trending, where you should be out and you should not be in a straddle. So this was the time today morning, once that 24,300 gave a exit above 140 or so. After that, there's nothing to be done, and then just wait. Another feature which can also be used to get more objective levels is the anchor support resistance. So go to add study, go to patterns, just type anchor support resistance over here, change this 20 to 10 and click on OK. So what you get is a series of horizontal lines. Wherever there is an anchor column of 10 boxes, wherever the anchor column starts, there you get this green line, which is a support line, and red line, which is a resistance. So those also can be used as stop loss. For example, if you see today's stop loss, the one which I mentioned, that this trade which got activated over here and it went all the way down over here. So if not, even if you remove the triple moving average, this alone can be a good feature to trail a straddle. Now, the longer the line, if that is broken, that means the trend is that much stronger. If the line is very short, you can use it as a stop loss, because that finally you have to make profit. So here there was a big anchor column, a bearish anchor column, then a big bullish anchor column, after which Nifty started falling heavily. So either this high, which is 154, or this turtle, which is 147, or this anchor resistance, which is 160. So you could have used any of these to exit the straddle, which you had started almost at 300. So after that, there was no point in saying that I will still remain short in the straddle, because no one knows where Nifty is going to go. And in fact, everyone knows that today Nifty went to less than 23,900, and you can see the straddle went all the way to 440. So there was no point in expecting or hoping. Let that trade not become a hope trade. So better to exit and stay away. So these are the couple of things which I added over the last couple of years. Look at VIX and then decide what is to be done. When market is falling sharply, VIX will be definitely rising sharply. So that time stay away, and then use these anchor support and resistance with 10 box parameter. By default it is 20, and those can be used as a stop loss. And when that breaks, that means it is breaking a support. When that crosses the green line, that means it is when it crosses the red line, that means it is crossing the resistance. So these are the two things which also can be added for anyone who trades straddle shorts. But one thing you must keep in mind, there is no reason to be short in a straddle at every given point of time. There are times when the market is trending very strongly, sometimes bullish, sometimes bearish. So better to stay away in those 2-3 days, 4 days, whatever the trend is there. Who knows, sometimes the trend might last for 10 days. We have seen Nifty going up by even 1,000 points. So there was no point in shorting a straddle during that time, and then firefighting for adjustments. So in this way, you can manage your trade accordingly with the stop loss, exit, and then wait for the fresh entry at the fresh ATM. So I hope you have liked this video, and do subscribe to our channel and like it, and share with your friends, whoever is trading straddles. Thank you.